Hello everyone and welcome back. My name is Greg Furman, a market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of December the 5th, 2011. Now, to get started this week, we've had another volatile week in all markets, not just the currency markets, with more in what I would call a form of intervention from the central banks, where they're dumping liquidity into the system in a desperate attempt to prop up the equity markets for the inevitable fall. Now, what we're seeing here is this is a desperate move, in my respectful opinion, and buying into this, buying into this equity rally, probably not a great play. When we look at the European summit that's coming up, we've already been through this many times, and as I've told my own clients, that this is the Fed at work again, trying to protect those precious equity markets. But every time we've come into these European summits, the equities have rallied, and then right afterwards they've plummeted. Like, let's face it, some of the countries coming into this summit don't even have proper governments set up. So how could there be a positive outcome for this from the and then again, we look at the global financial situation, and the global economic situation is certainly not good. So not the greatest environment for a big equity rally. But I'll touch base on that in a moment. For now, let's look at the dollar index and what's happening. Obviously, the dollar taking a substantial hit right after the central bank surprised the markets and started pouring liquidity, cheap money into the system, trying to weaken the dollar and prop up those equities. Well, by the looks of this, Vantage Point's not buying into that, and neither am I. You can see that we've come down, we've broken through a couple of times here on the Vantage Point 18-day predicted moving average, but we do not have a confirmed sell signal on the dollar index. And in actual fact, it's still somewhat bullish for the dollar. When we look at the crossovers here and we break them down individually, we can see the short-term crossover crossed to the downside a few days ago, but it's basically right after that Fed move. And then, but the medium-term crossover is staying basically flat, and the long-term crossover is still saying we're primarily in an uptrend on the dollar, and this is telling us we're in a corrective move. So I wouldn't be getting too aggressive selling dollars to start the week. I do think the dollar will come under further pressure. Again, this is a classic case of buying the rumor and selling the fact going into the European summit. Again, I'm going to repeat this throughout this presentation. I don't see anything positive coming out of that. The IMF is involved. They're not involved. They can't make up their mind whether they are or not. So I'm not going to anticipate what they're going to do. I'm going to look at the fact of the matter is this is the fourth time they've gone in to try and resolve this over the last year, each time failing. So we do not want to discount that. We can see the predicted short, medium, and long-term differences. They're also basically running flat. There is no trending move here. So we'll be monitoring this very closely throughout the week. And as I've told my own clients many times, don't get caught up in the intraday stuff. Look at the bigger picture. The bigger picture here certainly isn't overly dollar negative or overly risk on. So, but we'll continue through here and see what we can see. Now, looking at the S&P 500, again, a lot of market gurus, etc., calling for 1,300 by December the 10th. The reason they're calling for these numbers is not because of wave theories, Elliott waves, things like that. They're seeing very similar things that I'm seeing, that the dollar, or excuse me, the equities are rallying on the fact that they think there's going to be something, hoping, I should say, something good will come out of that European summit. And again, if we didn't have the central bank dumping the liquidity into the system, protecting those financial markets this past week, the S&P 500 would probably be down around 1150 right now. So again, whenever these types of moves take place, what happens is the shock to the market is it goes flying in one direction. But once reality sets back in, the primary trend prior to that announcement continues. That's what happened. That's what usually happens 9 out of 10 times. So my opinion is on these equities, This is not a risk-on environment, in my respectful opinion, and I believe that there'll be a lot of sellers, including myself, camped out between the 1265 and the 1288 mark on the S&P 500. We also want to point out that we are not making higher highs. We are making much lower highs. Now on this dip down here, we didn't make a lower low. You can see where I've got these lines drawn on these other candles. But again, the only thing that put the brakes to this was the Fed, was the global central banks coming together. And of course, we're never really going to find out what actually happened until down the road somewhere. But I think they were trying to avert a potential financial disaster when they did this on Tuesday. That's my respectful opinion on what happened there. So again, I don't think it's going to hold. We've got Vantage Point is struggling, trying to put out a buy signal, a confirmed buy signal on the S&P 500. When we break this down by the crossovers, short term is up, medium term is now up, and the long term is sitting flat. It is still having trouble saying that we have a complete trend reversal here. So I'm going to not to mention we are grossly overbought on this particular index. So we've pulled back. We've closed at 1243, but still a relatively strong close. So we'll see how things play out. But in my opinion, this is definitely something that this is buy the rumors, sell the fact. And the fact is nothing good is likely to come out of that European summit, and risk will be off. When we come in and we start looking at some of our other major commodities here, which we certainly want to do, we're going to touch base quickly on natural gas. That buy signal continues to form. We have a base forming down here. If we look at natural gas from 1 year ago, it was also selling off on the UNG, and then it based out right around in the month of December, and we can see that we had a steady climb moving from